Hello friends, welcome back to our video lecture series. This video will be about the conceptual basics of accounting, journal entries, sorry. Right. So in this particular video, we'll be seeing what a journal entry is or how a journal entry is prepared. And you need to understand one thing, that this topic is one of the important topics in accounting, because this forms the basics of all the accounting entries. If you do not know the journal entries, accounting for you would be a tough nut to crack. But believe me, we'll make this topic so simple that it would be a cakewalk for you at the end of this video lecture. Let's see what journal entries are and how to do the journal entries by understanding the conceptual basics of journal entries, right? So let's start. As we know that the accounting cycle involves these many transactions, need not worry. Some of these are repeated in nature. Let's see how. The first one is about analyzing the source documents. What happens is, for any business transaction, the first thing that you need to understand is you need to have some evidence or some proof based upon which you will be making the entries. So the first thing is to find out the source documents like the bills or invoices, the receipts, the payments, vouchers, etc. Right? So the first thing in the accounting cycle would be to identify or analyze the source documents, the basic documents or the evidences based upon which we'll be doing our accounting entries. Then comes the recording of transaction, which is nothing but the journal entries, which is the topic for the day. Journal entries. So we know that the first step into the world of accounting, recording the accounts, would be journal entries. Then based upon the journal, we post these transactions to the ledgers. Then we prepared a trial balance, which is an unadjusted. We make some adjustments. Then we pass the adjustment entries. We again prepare the trial balance. Then we enter the closing transactions. Then we post these closing transactions, and then we prepare a trial balance. So if you see, all these transactions are repetitive in nature. So the first thing that we need to understand is to record these transactions into our books of accounts, based upon which we will be preparing our financial statements, namely the income statement, the balance sheet, cash flow statement, and changes in equity. Right? So this would form the accounting cycle, which starts from recording and it ends at reporting to the users of accounting information, which we have already discussed in our earlier lectures, right? So if you try understanding what a journal is, we'll be talking about journal entries later on, but let's understand what a journal is. So basically, journal is a book. It's a book where business transactions are recorded in chronological order. What do you mean by the term chronological order? Chronological order means in the order as and when they happen. Say for example, on 1st of January, something happens. I would be recording this transaction first. Then if something happens on 2nd January, I would be recording this on 2nd January. Something happening on 10th January, I would be recording that on 10th January. So chronological order means in the order in which the transactions happen. Right? And we need to understand that journal can be of two types. One would be the general journal and the other one would be specialized journal. Now what was the difference between these two types of journals? General journal is meant for the small businesses. A business where the number of transactions are not very high. The number of transactions are few. In those organizations, in those type of businesses, keeping multiple books would be really difficult, or it would be time and cost consuming process. So in small organizations, what they do is they record almost all the transactions in a same book, which is called as general journal. Then we have something called as a specialized journal, wherein what happens, you have different types of books for different transactions. Like you have separate book for sales, you have separate book for purchases, you have separate book for cash, receipts and payments, things like that. Right? So basic difference between these two would be the volume of transactions. the volume of transactions. Which means if the volume of transactions in any business, if they are less, then you do the general journal sort of thing, wherein you have only one book wherein you record all the transactions. And as your business grows, as the number of transactions keep on increasing, it would be difficult for you to enter all the transactions in the same book. So what you do, you keep different books called as journals for different type of transactions. For purchase you have a separate book, for sales you have a separate book, for purchase returns you have a separate book, for purchase sales return you have a separate book, for receivables you have a separate book, for payables you have separate books, things like that. So the basic difference between these two would be the volume of transactions. Otherwise, the method in which the entries are made in this journal would be the same. So what is a journal? Basically, it's a book where transactions are entered. Now you need to understand the meaning of transaction. Transaction means you have two things happening simultaneously. If you are giving something, there would be someone to receive it. If you are receiving something, there would be someone to give this. If there is an expense for you, there would be an income for some other person. If it's an income for you, the other person would be expensing out for that. So as we know that we follow the double entry system of bookkeeping, which means the transactions would have two sides, one being recorded on the debit side, the other being recorded on the credit side of two different accounts. They are to be done on a simultaneous basis. So bookkeeping is nothing but keeping the books of accounts in order. And the book where these things are kept is called as the journal, and the entries that we make in this book is called as journal entry. Right? So what are journal entries? These are the transactions which are being entered in a specific manner in the journal, would be called as the journal entries. Right? Then why do we need to understand the journal entries? Because without understanding the importance of journal entries, it would be really difficult for us whether to go through this tedious process or not. So we need to understand the importance or the benefits of the journal entries, which are as follows. The first, journal entries are the first step in the accounting cycle. As we have seen in our earlier slide, that the first thing that we need to do after identifying the transaction is to record them in a proper manner. So the first place where the transactions are recorded is in the journal book, and these are called as journal entries. So this forms the foundation for accounting. And once we do that, we are sure that the data is captured in a proper manner, right? Then we need to understand the working of journal entries, which would help us in identifying and rectifying the errors promptly. Once we know how the journal entries work, we would easily make out whether the entry which is being made by us, whether it is proper or not. If there is any error, we can detect the errors as and when they happen, and we can rectify the same by passing a rectification entry. Right? Then the journal entries gives us the record of day-to-day transactions of the business, and it helps in preparing the ledger accounts based upon which the financial statements, namely the profit and loss account, the balance sheet, cash flow statement, changes in equity, these statements are prepared. So the understanding the journal entries is very important for us, and the only thing that we need to understand, that we need to keep in mind, is everything is by way of double entry bookkeeping, double entry system, wherein you will have at least two accounts in all the transactions. At least two, there can be more than two also, but at least you will have two accounts. One account would be recorded on the debit side, the other one would be recorded on the credit side of different accounts. And the meaning of debit and credit has been discussed in our previous classes. You can, if you haven't gone through those lectures, you can find the basics of debit and credit in our previous lectures, right? Very important, the format of journal entries, the format of a journal wherein the entries are to be made. You need to understand that the whole book of journal entries is divided or classified into five parts. This is the standard format which is supposed to be followed by any person who is trying to make the journal entries. The first one would be the date on which the transaction happened, transaction date. It is not the date on which we are recording these transactions. Say for example, if something happened on 1st of Feb, we would be recording this on 1st Feb only. If suppose 1st Feb was Sunday and you record this on 5th Feb, you forgot to record this. Even then, in that case, you would say that this transaction belongs to 1st of Feb, so we will be recording this on 1st Feb. So the date would be the transaction date, not the recording date. And it is better if you record the transaction as and when they happen, so that there are the chances of leaving out any transaction would be very less. The second column would be related to the narration or particulars related to that transaction, wherein we'll record the transaction in the language of debit and credit. We'll see how. The third one is related to the ledger folio. LF stands for ledger folio. LEDGER, ledger folio. In simple sense, this is nothing but the page number of the related ledger, related account. What is an account? We have seen that in our earlier class. So this is nothing but it indicates the page where this would be shown in the next step. Then you have two columns, one namely debit, the other one namely credit, wherein the amount of debit or amount of credit is to be recorded. And again you need to keep in mind that the amount of debit should always be equals to the amount of credit. Now let us see how to record the transactions by taking a few examples. Say for example, if I say Mr. A started a business by introducing a cash of 1 lakh rupees. Now we need to understand that there are two accounts which needs to be recorded here. One would be the cash account and the other one would be the capital account of Mr. A. Mr. A's capital account. One account has to be debited and automatically the other account would be credited. Now as we have seen in our debit and credit class that this cash account would be debited because cash is coming into the business, and capital being the nature of credit, whenever the capital increases it has to be credited. So one thing is clear that out of these two accounts the cash account would be debited and the capital account is to be credited. Now let's see how this is to be recorded in the journal, right? What I do is the standard format is you need to write the debit account first. So which is the debit account here? In our case it is the cash account. So we need to write it starting from this line. I would write it like this: cash account debit. This is the way how we need to write. And then in the next line we'll be recording the credit transaction. And every credit transaction, in our case it is the capital account of A, every credit transaction would be prefixed by the word to, TO2. So how do we write this? I would be starting it from this place, to A's capital account. We are having two accounts here. One is the cash account and the other one is the capital account. Cash account is to be debited, so I write this starting from this line, this place. And I would be writing cash account debit. It would be suffixed by the term DR, which stands for debit. And the next line would be, for in case of multiple transactions you need to record all the debit transactions first and then you write the credit transactions. Since here we have only two accounts, only two lines are required, so the first one would be related to debit, which I'll be recording just near to the line from where this line starts, right? And the other one which is related to the credit of that account, I would be giving some space here. I would be leaving some space here, and then I'll start writing it by prefixing it words to. So the entry becomes cash account debit to A's capital. Now in the amount column under debit side, I would be writing on the first line, I would be writing 1 lakh. Similarly, under the credit, since the credit transaction is recorded in the second line, I would be writing this amount of 1 lakh rupees in the second line. So this is the way how we need to record. Then comes the important part of this, wherein I write the description or narration for this. This entry stands for the amount which is brought in by Mr. A towards his capital contribution. So I would write, this is being cash contributed by A towards capital. Or even I can say business started by Mr. A with a capital of 10,000, whatever way you are comfortable with. And as soon as this entry comes to an end, I draw a line here, which is an indication that my transaction related to capital has been completed. Assuming that I've invested say 10,000 rupees by opening a bank account. So this happened on 5th Feb, say for example. How do I record this? I would write 5th Feb here. I'll find out what are the two accounts involved. In our case, this is the cash account and the bank account. Which account to be debited and which to be credited? The cash account, cash goes out. So cash is to be credited and bank account is to be debited. Bank being an asset for us, asset has a debit balance. Whenever it increases, it has to be debited again. So my entry would be, it would be starting from here. The first line would be for dedicated for the debit transaction. So I would say bank account debited. And then my cash account is created, so I would say to cash account. To cash account. How much is the amount? It's 10,000. So in the debit column I would write 10,000 here, and in the credit column I would write 10,000 here. And I would say cash deposited in bank, or I would say opened a bank account by depositing 10,000 rupees as cash. So in this way, I would be recording all the transactions, keeping in mind that the first line or initial lines would be dedicated for the debit accounts, and then it would be followed by the accounts which are to be credited in our books of accounts. And also you need to understand that wherever you write the term debit, you have to write the amount in the debit column in that line only. And wherever your credit transaction is, you would be recording that under the credit column in the same line. You cannot write the credit amount here, or you cannot write the debit amount here. That you need to keep in mind. So once you keep on entering all these transactions in a chronological manner, what happens is you need to close this. How do you close that? You draw a line here and you say that this is my total column. This would be my total. And if I see my total due to these two transactions would be 1,10,000 on the debit side, 1,10,000 on the credit side. If I have multiple transactions, then what I do is I carry forward these transactions to the next page in the journal. So what I do, I write here balance carried forward, and in the next page I would start that with the opening balance here. I would be writing the balance first, and then I would be recording all these transactions. Right. So how to make the journal entries? You have specified format wherein you have 5 columns. The first one is dedicated to the date of transaction, not the date of recording. The second one would be talking about the details wherein you have both the debit and credit transactions. All you need to keep in mind is first you will be recording the debit transactions and debit accounts of a particular transaction, which will be followed by the credit accounts of the same transaction. The amount of debit and the amount of credit would be recorded in their respective columns only wherever you are recording it, and this you would not be using it that in your general studies, because this is automated these days. When you have a computer when you are doing the accounting using computer softwares, this page number is automatically done by the software. So you won't find these ledger numbers to be entered anywhere in the transactions. So need not worry about this. But all you need to keep in mind is this stands for the ledger folio or the page number where the account is recorded. So this is how the format of a journal would look like. And this is how you need to make the entries, right? So hope the topic of journal entries was made a bit clear. In the next video lecture, we'll be taking some more transactions and we'll see how these transactions are to be recorded in the journal book. And we'll also see how the balance is to be carried forward into the next pages, right? So thank you so much and bye.